Good afternoon, everybody. This is Bob Iacchino from Path Trading Partners along with Mike Arnold. This is a PM Path Chat for May 4th, covering the futures markets. A few interesting things happened during the trading day today, not the least of which was the American Health Care Act passing the House, which was treated as if it was some sort of election victory. It still has to go to the Senate. It's likely to be completely rewritten and didn't really have an effect on the markets in terms of being sort of a proxy for tax cuts or anything else that President Trump wants to pass. But it is his first legislative victory, even though that legislative victory is only part of the legislature. We go back to what the Fed said yesterday about the slowdown in Q1 being transitory, and you would start to think that April data would matter. And the first April data we've gotten, short of jobless claims, which came in better, there were fewer people requesting unemployment claims, 238,000 versus 248,000 expected. And on continuing claims, 1,964,000 versus 1,990,000 expected, 1,987,000 last. Was the Challenger Grain Christmas data, which came in stronger. In other words, weaker. Challenger Grain Christmas puts out a report about planned layoffs, and the data being stronger means there were fewer layoffs, so a better work situation. Talked about it a little bit this morning in the AM Path Chat covering FX. Down 18% from last month and down quite a bit year over year, although the year over year probably shouldn't be applied. There's no seasonality factored into that, but there are fewer layoffs being planned. U.S. trade balance slightly lower or slightly better, whichever way you want to look at it. A lower trade balance is better. We already talked about jobless claims. U.S. factory orders for March. Again, we're looking for April data. The only April data was Challenger and the jobless claims. March factory orders up 0.2, which was lower than expected. It's expected at up 0.4, and durable goods orders on their final up 0.9, so revised slightly higher than the 0.7 expected, and obviously the 0.7 last. So that's the data for today. Stocks didn't really move. Crude oil, the rout continues. Metals, the rout continues. Gold took a pretty big hit today. Crude oil got down below 46 into the mid 45s. And as I mentioned, stocks didn't really go anywhere. You look at the equities and they were virtually unchanged, especially in the Dow, with energy pulling it down and the rest of the market really being just kind of uninspired. So let me see what Mike sees on the charts. You can see up here we've got a VIX. I think the VIX is very interesting right now. So Mike, it is all yours.
Okay, thank you very much, Bob. Quick VIX watch update. Again, popped into the 11s, traded against the rotation zone, and then went back down, closing at 1046. So still closing in the 10s. Still no fear in the market. Very, very complacent. Let's switch over to some indices and futures we follow. Transports still caught in this range it's been in, for about the last week. Rallied up, rallied down, tested the 50% GAN rotation, pretty much closed flat. So we have sort of a couple lines in the sand. If we can get below this 90-70 area, you could see it run down to the 90-40 and then the 90-28 and possibly the 90-10 area. If we can get a move above this 9200, then you could possibly see a 9218 followed by around a 9250 and then possibly a 9317 area. Over to the industrials. Industrials also traded lower for a while, down into the rotation zone, when again dipped below this 25% GAN level, and then closed back above the key level. So could not get any sustained selling below this. If we can get sustained selling below the 20,900 level, and then we can retest this low put in today, which was, let's see, the low today, 20,847.95. We can get below that, Then we are looking for a test of the 20,809 to 20,800. Then if that is broken, 20,750 area. And then finally 20,723 is next level down. And on a really big move down, we could see something around the 20,660 area. On a rally up, especially if we get a sustained move above this 21,010 area, next key levels up right now about 21,050, followed by the most recent high, which is the new defining point for that trend line you saw me redraw, which is 21,070. Then the next GAN level projection up is this 21,157 area to 21,169 prior highs. Switch over to the S&P. S&P also just dipped a little into the rotation zone, tested a 25% GAN level, and then closed higher on the day on the 12.5% GAN level, right around this 2385 level. So let's go look at the upside. Very key resistance, 2390. If that's broken, 2394 to 2395. And then if we get above that, 2401 and then 2404 area. On a pullback, 2385 to 86, first level support. Next level support, 2376 to 77. Then we really don't have anything down around this 2368 to 2366 area, and on a very large drop we'd be looking at a 2358 support. Finally, over to the Nasdaq. Nasdaq, which has held up the best of all these markets, came down, tested the 12.5% gain level again, the 5605 area, closed higher on the day on a continued up move, 5641 to 42. First level resistance, then we're all the way up to 56.78. Then on a really strong rally, 57.14 to 15 area. On a pullback, 56.04 is the first area, 55.96 is the second area. Then we're possibly looking down to about 55.87. And on a more substantial drop, 55.68, followed by, you might see some support around 55.55, and then on a huge drop, 55.31. Over to crude. Speaking of large drops, crude oil, very big down move today. We talked about this end of the clear path, which was officially at 45.24. Let's see where the low today, 45.29. So 5 cents off the end of the clear path move today. So that's going to be a very key level. Now, if it does drop further, the next level down is about that 45.09. Then we don't have much until 44.23, 43.78, then about the 43.16 area. On a rally back up, one GAN level rotation higher would be around 46.35. Followed by this big cluster in here, 46.88 to 47.04. So that's going to be your next key resistance area, 47.41, and then returning to this other end of clear path, prior breakdown zone. Going to lower that a little to technically the breakdown zone, 47.67. Then we have the falling 8 coming in at 48.11. Over to copper. Copper tested both ends of the ranges today, rallied up, traded lower for a while. You can see tested some GAN areas higher and lower, and pretty much just closed slightly down on the day. So on a move back lower tomorrow, we'll get about $2.49, followed by $2.4864. Then on a bigger push down, end of clear path, $2.4673, and then on a very big drop, about $2.45 area would be next key level. On a rally back up, minor resistance right around this 254.18, followed by 255.80, followed by about 257.55 on the upside. Over to gold. Another down day for gold, going through this key 1231 to 1232 area. On a continued downward move, not much until 1220, and then below that, coming in possibly around 12, 10, 11, and then to 1204 to 1207 area. On a rally back up, this 1231 to 1233 is going to be resistance now, followed by a possible retest of the trend line right around 1240, and then on a bigger rally up, 1246 to 1247, significant level, and return to the 50% gain level. Then on a very big move up, 1254 is going to be the resistance. Finally, over to silver. Also, another down day at silver. Silver continues below today's lows, which will be the first level support about this 1621. Then we're going to 1604, followed by about 1598 to 16. Then if that's broken, we could eventually see downwards to 1581. Rally back up. First area of resistance is going to be around 1650 to 1652. Then we're looking at about 1664, and then 1679 to 1682 area, and then we have a falling 8 coming in about 1697, so virtually the $17 area. That's all we have for you. Back to you, Bob.
Thank you, Michael, and thanks everybody for watching. If you like what we're doing, hit like and hit subscribe, and we will talk to you in the next Path Chat. Cheers, everyone.